we ready?
Good evening, everybody. Tonight we've got the great pleasure of having Harry Boxer back with us. Harry's been around trading for over 40 years. He actually was the chief technical analyst for three brokerage firms in the past. And tonight he's going to be talking about different patterns or technical patterns. So with that, Harry, I'm not going to take up any more of your time. Welcome to the Candlestick Forum. We're anxious to see your information tonight.
Great. Thank you, Stephen. Good to be back. Folks, we have a limited time, so I'm going to get right to it. I wrote a book called Profitable Day in Swing Trading, using price volume surges and pattern recognition to catch big moves in the market. I'm a big believer that stocks repeat patterns in all time frames, even 1-minute charts. So I've had a big aha after 2000, after the market crash. I decided I can't necessarily be involved in taking overnight risks, so I started to do a lot more day trading, and I realized that the patterns that I saw on my daily charts, the bar charts, all repeat in every time frame from an hour to 15 minutes down to 1 minute. So I started using 1-minute patterns, and it's been really successful. One of the things, though, that I think most traders don't do is properly prepare. I think the trading day doesn't just begin at the opening bell. Ask any successful trader, and you'll discover he has a routine leading up to the trading day that's nearly as important as what goes on during the trading hours. Preparation is the key to many things in life. I think trading is definitely no exception. I think most people come into the market, they take a look at what's going around, they take a look at some stocks that are gapping, whatever, and they buy based on a thrust or a piece of news or something. What I look for is certain patterns. What I look for is opening thrusts and the following patterns that develop in terms of consolidations, and whether or not the volume patterns within those consolidations are potentially leading to a trend that day, an intraday trend. But before we even get to that, one of the ways I set up, and what I do is I set up a focus list every morning of anywhere between 12 and 20 stocks that are gapping or running or moving on a follow through from the previous session. So in order to do that, you need to analyze patterns from the previous day to see which, if any, are going to be setting up for the next session. One of the things I look at is the closing patterns. In particular, if a stock is trended all day and it closes really strongly with good volume, first of all, what does it look like after hours? What's it look like the next morning pre-market? And what kind of patterns are they setting up? My suggestion is to do that work when it's fresh in your mind and do it right after the market closes. And start jotting down symbols or preparing symbols on your computer or your watch list. That's what I call it, a focus watch list. I'm looking for key bullish price action with relatively higher volume than normal. And I'm talking 5 to 10 times at least more volume than average over the last 100 days. That's what I consider significant price volume surge. Look, price is great if it moves sharply, but it's not as good as if it moves with volume. And stocks and volume that moves tremendously. If you see a stock up 5, 10, 20 times volume and it's going nowhere, it may not be as useful, but it is an indicator of some potential, perhaps big accumulation that could be what we call a high volume zone that could be a signal of future price action. What we want is, if a stock is thrusting or moving sharply early on pre-market, I'm looking for some key bullish price action, hopefully on a significant price volume surge through a key technical resistance or support zone if you're shorting. You were looking for the following bullish or bearish consolidations or orderly retracement patterns, like bull flags, bull wedges, coils, pennants, things of that nature. There's plenty of examples of that, and I'll show you some in a bit. But the patterns that we see in the morning, particularly the ones that get very quiet and get to what I call a low volume ebb. It's like the ebb and tide of the ocean. When the tide goes out, it stalls for a second and then it comes back in, right? That stall for the one split second is what I call the ebb tide. That's where you get the expression ebb tide. And the same thing goes with volume and with price action. It'll often come to a point where it'll get really, really quiet and narrow just before a move starts, and then boom, it'll break out of that pattern. But before I get to showing you patterns, I want to talk about how you prepare in the morning and what I particularly look for. I spend an hour or so every morning in the pre-market poring over many of my sources of information for news that may be affecting stocks. I check pre-market price percentage and volume percent gainers. I want to see stocks that are moving significantly, pre-market perhaps. I want to see a key news that may be affecting that. I want to see if that news is just, for example, in biotechs, if it's a phase 3 key drug approval, or if it's just a phase 1 or 2 result, it could be a huge difference. A lot of times you'll see low price stocks will pop based on a positive trial, but it isn't necessarily going to be a day trade that day because it may not be significant enough and it's too far down the road to be significantly affecting a stock for a trend. What I find is the bigger and more important the news and the resulting gap that it creates, the more likely it can trigger a significant price volume surge, not only that day, but for even months and years. Many of our day trades that we spot the day they break out or the day they pop become swing trades and then down the road become intermediate to longer term trades. Many stocks that I've had as swings turn into magnificent 8, 10, and 20 baggers down the road if you guys have enough patience to stay in them, of course. But I think the number one thing we're looking for in the morning is percent change leaders and price volume leaders, stocks that are moving way over their average volume. And I'm also looking on the charts to see where previous resistance and support might have been and whether or not that price volume surge is taken out a key level. Moving averages I use are 10, 21, and 50-day periods because I think they're much better for short-term trading. The people who use 100 and 200-day moving average, I think, are so long-term that the 200-day moving average for me is not as important. And I've studied this over 55 years I've been trading, that the best moving averages are 10, 21, and 50-day periods, not just necessarily days, because I use 10, 21, and 50-day 50-period moving averages on my 1-minute charts intraday, and be shocked how accurate they are. And again, when we're looking for these early consolidations, the price volume surge, the volume during the formation of those consolidation patterns should be dwindling to a low volume ebb to be ideal. In summary, I'm taking the time to carefully review and analyze the prior days and weeks patterns and the technicals, as well as the pre-opening market action and related news events for the current session, which is just as important in determining what stocks you have on your watch list, and it's critical to your potential day trade success. The best traders I've known over the many years basically plan their work and work their plan. And so, again, to develop a disciplined, focused approach by coming up with a focus list in the morning. And what I do for my people is I come on before the market opens, about 20 minutes of 9 in the morning Eastern. And I'm basically on with them 30 to 40 minutes going over that focus list, showing them the action, showing them the charts, showing them where the support and resistance is, and that's what I base my recommendations on. Now, early on, we're searching for the big gappers, at least 4 or 5%, and maybe more. And people are always reluctant if a stock gaps 5 or 10% to buy the stock. You'd be amazed how many times a stock will gap 5 or 10%, and then later in the day it's up 30 or 40%. It's uncanny, particularly with low price stocks. So let's show you a couple examples of what I'm talking about. Here's a chart on a company called Wuba. And you can see that there was a big breakaway gap here. These are 1-minute charts, by the way. It popped and formed a little wedge. It got very quiet right in here just before the volume came in and popped. Now, in this case, there was no follow-through through the prior high. Notice it tagged it, tested it again. It got extremely narrow and quiet, but right in here is the key action for me. It got awfully quiet and awfully narrow in terms of the bars, and the volume was non-existent nearly right in that range. So as soon as it popped here, I put a buy signal on. That was about 35.20. Within a half an hour, it was 36.60 for $1.40 in literally less than half an hour. And I put a line across here for support because that's how it developed. And when it broke out again here, those who were in it benefited even more. But those who sold it on the spike up rebought it there because I put a second day trade out at 36.62, I remember. And it got up to 38.10. So net from where we put it in at about 35, 34.90, it got up to over 38, and that took 2 hours. So that was a nice little day trade, but it took some patience because if you were in here, obviously it was driving you crazy for a couple hours. But since it didn't break support, there's no reason to sell it. And at the end of the day, you had a nice 1, 2, 3, 4, 5-wave move. Now, in basic Elliott Wave terms, 5 waves is where I sell a stock when I see a 5th wave, whether it comes at midday or at the end of the day. So that would have been an exit for me, at least somewhere in that zone. Another example is zone. A nice example here, as it popped with a huge opening gap and then ran sharply. We didn't do anything with this until it formed that pattern and broke out there. After running in a mini 5-wave move, it then came down for about 90 minutes. an orderly pullback that kind of held right near that level and near the apex of this coil. When it broke out a huge volume and ran up and formed another bull coil and then stabilized, you notice that it did not break the prior high and it held support right there. Moved up and broke out, formed another coil, held near that prior high and ran up. But net from where we first bought it at about 470, the stock was up to 570. A nice $0.1 trade on a $4.70 stock, or we're talking 22%. It's a nice day's action. And you can see that the stock gapped, ran, consolidated, formed a wedge, a flag, a coil, and all within a rising angle. Now the angle I prefer is about 45 degrees. From the left corner lower to the upper right corner. That's 45-degree angle. It's a little less than that. But as long as it maintains a channel, you'd be shocked how many stocks constantly form intraday rising channels, and they're a day trader's dream. I have lots of guys in my room that basically take a few of my recommendations. I tell them where the stops are, where the targets are, and they basically leave and don't trade. They basically put their orders in, their stops, and they come back and see how much money they made or lost. Particularly a couple of my guys who are professional golfers who are on the golf course. It's kind of fun to see that because they say that they think it takes emotions out of it. And that's kind of true. You'd be much better off not knowing the name of the company or what they produce, just keeping an eye on the pattern and not getting your emotions involved. If you're an emotional trader, you're probably better off by just putting your stops and targets in and not watching it too closely. One last example is FMI, which, when it opens, had a quite unusual, and the reason I showed this to everybody, it exploded and pulled back. Note that this little pullback came right to where this little bar high was. And then it went sideways and got very quiet, very narrow, right near the apex. The price volume surge got into what we call the low volume ebb, and it popped with big volume. That volume got me in right there at about 21.10, 15 range, I remember. It popped in wedge, it popped in flag, it popped in coil, and then it exploded. It went all the way up to over 25. Many of us got out in the 24.5 range after getting in the 21 zone, a nice 3 or 4 point pop to it. And even then, after that, by midday, the stock went sideways. Let me also give you my theory about intraday trades. That if a stock has multiple waves up and then spikes into lunch hour, right about 12:30, in that zone, I always sell the stock. And the reason I do that is after talking to dozens and dozens and dozens of institutional traders and traders that are responsible for trading a house account and or for a fund or something like that. These guys are paid a percentage of the money they make. So if they see a multiple wave move and a run up with a sharp run up like that before lunch hour, they'll take their profits, they'll go to lunch. And believe it or not, as funny as that sounds, many stocks will peak out just before lunch or around lunch hour and then do that the rest of the day. So that's one of the reasons why and I can't get into that today, but when I discuss Elliott Wave and Elliott Wave theory and incorporating it with bar charting and daily trading, you'd be amazed how beneficial it is to have the knowledge of it. And what I look for in terms of Elliott Wave is the 5-wave move. Here's a nice little 5-wave move from a company called VISN. It was a symbol, Vision Media, I believe. It popped sharply, formed a wedge, got very quiet down there, and then popped again but couldn't get through, pulled back very quietly, hardly traded, and broke out right there with a big surge in volume. See that volume bar? That's the breakout right there. So I put my people in around 9.5, and I mean within minutes, this was 10.5. Beautiful dollar move very quickly. Then it went into an hour-long coil and broke out there. I put a second trade on right there with a target about 11.25, 11.5, something like that. I think it reached 11.40 right there. After a 1, 2, 3, 4, 5-wave move by lunch hour, right after 12, we sold our stocks. And the rest of the day, it did nothing. We see that a lot. I see that a lot in my trades. So that we're talking about early price action and the setup for the day trade. If a stock goes up significantly and then holds that level, usually developing, it'll usually develop an intraday uptrend and will become evident in the first 20, 30 minutes of trading. Many successful traders I've known or observed over the years will not anticipate the move. They won't wait. They'll rather wait for the trend to develop before committing funds or adding additional positions. A lot of times they'll buy the first pullback. I'm a big proponent of buying the first pullback and then putting a stop under the gap where it gapped up to. because if it fills that gap or moves into the gap, it's definitely not as strong as I'd like it to be. Wait for the first pullback or the early consolidation, the flag, the pennant, the coil, etc., or the wedge. Many of my traders refer to a real distinct wedge in the morning as the boxer wedge, because I like to trade that first wedge when I see it. It's the first consolidation pattern, no matter what you call it. That comes on lower volume, indicating an abatement of sellers, but at the same point, a kind of a Mexican standoff between buyers and sellers, where they're both waiting to see who's going to blink first. And if it holds the gap or other significant support that you've seen on the chart prior, it could be very, very good stuff. And so one of my favorite early technical indicators that I follow is something called volume buzz. I'm not sure if you've ever heard of volume buzz, folks, but I used bar charts, and I use TC2000 and by Warden Brothers. And they have something called volume buzz, which I think is phenomenal, because basically it clearly indicates at any moment and any point in the time or any second of the session, minute by minute or second by second, what the percentage of volume is traded at that exact moment in a stock compared to the previous volume traded at that point in time during the session at any time over the last 100 days as an average. So what they do is they average the volume, and obviously you can't do that unless you had a computer, but the computer will normalize the volume as of that moment over the last 100 days and tell you what the volume today is compared to what the average volume over the last 100 days was at that moment in time, which I think is phenomenal to have. Because if, for example, after 20 or 30 minutes, the stock has popped on huge volume, you can take a look at, is this 500%, 5,000%? I've seen 20 and 50,000% more volume than average in the first half an hour on a stock. That tells me that money is flowing, and it may be a good reason. Okay, so that's something that's very valuable in helping one not only spot stocks that may be possible day trends, but something that would be, I think, a much more high probability trade. Let's take a look at some more examples of my 5-wave intraday move, just to digress for a moment. There's many of these. And by the way, I didn't cherry pick these stocks. I can show you stocks from today and last week that did the same thing. This is a 1-minute chart, a company called Melanix, that opened with a big gap and ran up and then formed a beautiful bull coil. And note near the apex right there, it got very quiet and narrow, hardly traded, and then it popped and broke out right there. We put and big volume too. We put a trade on it right there at about 37.5, and within a half hour it was trading at 39.25. That's a nice trade right there. It then flagged, popped out, wedged, and ran up. It did a 1, 2, 3, 4, and then a 1, 2, 3, 4, 5. So basically, I consider this wave 1 and 2, wave 3 and 4, and then 5 waves within the 5th wave. I'm a seller right there. And also hit the top of the channel that I had drawn in. And the rest of the day, not much, but it didn't break down, but it was a waste of your time being in the stock because you already had the big move. And the last example I showed you FMI already. So just to repeat real quickly, you need to develop a disciplined, organized, and focused approach in the morning. You need to spend time monitoring not only the pre-market action, but the early price action and the volume action as well to see what kind of patterns are setting up that may be a setup for a day trade or a trender. This is the volume buzz. I wanted to just show it to you one more time because to me it's the most valuable tool I've ever seen. To be able to find out at any second of the day what the volume is compared to what the average volume was over the last 100 days, I think is fantastic. Something that nobody has because this is proprietary to Warden Brothers. Now, I'm sure it's easy to do or it can be done, but Warden Brothers provides it on their charts. Now, my favorite day trade pattern is an intraday rising parallel channel with high relative. That's the best day trade pattern. With low volume ebbs in there, you'll see plenty of examples. Here's an interesting one. XPO Logistics, which, by the way, right now is one of my current swing trades, and it's way higher than this. But here's a perfect example of what I talk about and what we look for every day at TechTrader.com. Gap, run, and coil. Get very, 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 very quiet. Look how narrow it's gotten there. Very, very narrow. Very quiet volume, and then it breaks out. There's my trade. Target was up here. It coiled. Denver broke down. Next target was up around 22.50. I got up to 68. Never broke support. Popped on top of the highs, held it, popped and coiled again, And at the end of the day, from our first entry point, about 20 and a quarter, 2020, we got up to almost 24. That's a nice trade, about 20%. And there's a parallel channel, 45-degree angle almost, rising channel. And what I call it, why I like this pattern, because I call it the effortless trade. You don't need to have any energy on it. You don't need to get excited or worried about it. You know where your stops are. You know where the trend break is. You know where moving averages are, where support is. This is the kind of stock that you can just stay in all day and go cha-ching, because basically it just keeps going up and keeps making more money for you. Now, you can peel along the way. I'm a big believer in scaling in and scaling out. If I see the pop and pullback, and I buy a little here on the pullback, and I see it move up right here, I may buy a little there, and I may buy some more there. I may buy it when it breaks out there. But I'll also scale out at times. If I have, say I have 2,000 shares of something, I'll sell 500, 500, 500. At the end of the day, I may sell the rest of it. Or if I'm stopped out, then I'm out of the rest of it. But that's my personal feeling, and I mentor my people all the time about scaling in and scaling out. An example of the low volume ebb we keep talking about is ATRM. I think I showed this to you earlier. Maybe not. But check this out. Explosive move. And this is 2 minutes. So we're talking about 8 or 9 minutes after the pop and pull back. Look how low the volume got right there. See it? Extremely low volume. So right at the apex of this wedge, the volume came in extremely low, and then the volume surged as it broke out. This is where we bought it, at 763. And I'm talking about 15, 20 minutes. It was trading at 9 3/4. 2 points right there. Yes, after a big run from under 5 to almost 10, you're going to get a long consolidation. But take a look at what happened at the apex right there. Extremely narrow, quiet, low volume ebb. Hardly trading, right? Pop goes the weasel right there. Volume comes in. Didn't quite break out. And even then, after it popped and ran up to the prior high and backed off, it then came on again. We bought some more at 10 on the way up to 12 1/4. And at the end of the day, it closed at the high for the day going away. That was one of our really good trades. But that just goes to show you there's a lot of people that see a stock go from like 4 3/4 to 7, 7.5, basically 50, 60%. They're not going to buy it. They're going to be afraid that it's going to pop and drop. But if I see the right pattern, the right consolidation, the right volume, we're in. Here's an example of a stock called Regato, a biotech stock at one point. Same kind of pattern. Pop and coil, low volume ebb, really quiet near the apex, holding right above the moving averages. So we put a buy when it moved out at about 555. It ran quickly at about 6 1/4. Coiled, popped to 670. Flagged, popped to 7 1/4. Flagged, and eventually at the end of the day got to 8 1/4 from where we first put it in, about 5 and change. There's a 60, 70% trade. That's a good one. Notice how it held it parallel channel all day. It's amazing, but from a day trade standpoint, if you bought a stock that popped, coiled, and then broke out, the rest of the day it didn't break support, it didn't break support, it didn't break support, it just kept going up in a nice parallel channel. And that's what we look for. Now, I'm a big believer in using focus lists, but I also there's many different types of patterns and types of indicators you can use. The basic stuff is the 50-day moving average crossover. Now, if there's a book out by, and I have no necessary financial interest in this, but when I read this book, I was amazed. There's a guy named John Boyk, B-O-I-K, who wrote a book called Monster Stocks. Very, very entertaining book. It shows all the big winners of the last 8 or 9 decades. And not only how they ran up and pulled back and held the 50-day moving average, and J.P. Morgan bought it there, and so-and-so bought it here, and Lehman brought it there. And just read, if you get a chance to read that book, I think you'll find it very elucidating. Here's an example of stocks that broke out on a daily basis and then ran up on a strong move. Here's the Bakes breakout right there. Here's a flag, a wedge, another wedge, another wedge. But if you look closely, and I know you may not be able to see it, the red dotted line here is a 50-day. When it pulled back here, it pulled back to the 50-day. Here it pulled back to the 50-day. Here it pulled back to the 50-day, and again and again and again. And if you see that pattern, this basically went from where we first spotted it at 7 1/4 to 23. And believe it or not, after this chart was finished, it went into the mid-30s. It was a 400% gainer for us in about 15, 18 months. That's the kind of stocks everybody wants. JK Solar, another good example. In each of these cases, parallel rising channels holding the 50-day moving average. Here's a test of the 50, a breakout, another test here, and another test there. See the parallel channel? It never broke that angle. This is a stock you can just stay in and watch it make money for you. And Pandora is another example. This line that's highlighted here was actually where the base was, where resistance was. This is the key breakaway gap. See the big volume? And when it pulled back to the 50 and then started to run, we bought this in the 14 range. Pop, pull back, all the way up, stair stepping up to 32 from 14, and eventually into the 40s. But notice the rising 45-degree angle parallel channel. It is amazing how many stocks do this. If you look at charts, if you see a stock that's running up in a parallel channel, and even if it's at this point or that point, it's very likely to base strictly on momentum alone and on the parallel angle of ascent. They will continue unless the angle changes or something changes in terms of volume. I don't have time to get into all my techniques about reversals, but when a stock reverses, you'll know it because it changes from up on big volume to down on low volume to up on low volume and down on big volume. And when it rallies on low volume, it's probably a bear signal. We don't have a lot of time today, so I'm going to do a little switch here. I want to show you some stuff. This is a list of my current box of shorts. Obviously, the market had a tough day today, and a lot of stocks are vulnerable. But I also want to show you that when you see a large major rising channel, head and shoulders, and a breakdown, and then a retest of resistance, which it would have been in this case right there, and begins to roll over and breaks down, we put a box of short out at about 168 on this. It's currently 130, hit 126 today. On a daily chart, you'll see it got crushed today. And if it gets below that level, I would not be shocked to see this make a move down towards 100. AZPN is a new one, and I'm monitoring this carefully, and here's why. When you see a stock, by the way, another example of a stock that where the moving averages crossed over, the stock started to run. Look at that beautiful rising angle from 28 to 64 in about a year and a half, and finally double topped and broke down. And this is a bear wedge, folks. And why is it a bear wedge as opposed to a bull wedge? Because it comes after a big move down. It comes after a trend line breaks. It comes when the moving averages cross over like they did right here. And when the stock moves back up to those moving averages and cannot get through, it starts to form a parallel down channel and breaks here. For me, I think this is a $50 stock. It might be a $45 stock. It's trading at 56. The next wave down should take it down around there. CATM was a really successful swing trade for us on the short side. Beautiful rising channel. And when it broke really hard and formed this flag in here, I put a short around 45 on it. It got down to, I think it got under 30 here. Let's see. No, 30.45. But it's down 15 points in a few months. And if this is a 1, 2, 3, 4, I think the fifth wave may take this even lower. Central Garden looks a lot like Aspen does. They both broke. They're both forming bear flags or wedges. This one dropped $1.30 today, and if it breaks this pattern, I'm going to see 24 on it, I believe. Just to give you some ideas on the short side. I got a lot of people asking me about that these days. IPHIs, I know they're forming a wedge and breaking down, but it just goes to show you that it works both ways, long and short. By the way, on IPHI, there's a head and shoulders right there. KMG is another new one, like CENT and AZPN, that are broken their trends and are forming bear flags. If this rolls over from this pattern, look out below, 40 bucks. And I can show you dozens of those. But I wanted to give an example of some of the things that we look at daily. Now, I want to also show you some examples of, I have literally dozens and dozens of stocks in my system that, for me, show the perfect patterns every day. Every day I'm seeing these charts. Gap, wedge, breakout. We bought it right there at about 20 and a quarter, 2020. And it only went up to 2090, but nobody was complaining because it never went down. It was easy money. It was only 70 cents though. We see so many of these patterns develop. Gap, wedge, pop, coil, breakout. And it was a nice run from like 11.35 to about 13 and a quarter. 2 points right there. We see that all the time. Dozens and dozens of examples. Pop, little flag, breakout, wedge, and onward and upward. And I'm just doing random charts. Here's one that exploded and coiled, and I didn't buy it until here. You see the volume that came into it? This volume? That's where we bought it. That was about 32 and a half. And sure enough, it got up to 35 and a quarter. So what I'm getting at, folks, is that every day these examples come up where stock gaps and runs and forms a flag or a coil or wedge or something and then breaks out. Here's an example of stock that went from 12.30 to 14.20 for a beautiful $1.90 and without breaking support any one time. The parallel rising channel over and over and over again. I'm showing you random charts here. Pop, wedge, just run up sharply and then channel up. It never broke support. Again, I'm picking out of dozens of stocks, random charts. Here's a pop and wedge, and we broke out there. It pulled back here, here, and here, formed a wedge, and then moved out again. And by the end of the day, it was trading at 32 from when we first bought it at 30 3/4. So, hey, $1.25, not the end of the world, right? Here's an interesting one. ZN, little oil company, popped and coiled, and when it broke out on volume, we bought it here at about 420. It got up to 495. And a beautiful rising channel. And when it spiked up, I told everyone to sell the spike. We had a target of 495. It almost hit it exactly. There are so many stocks like this. I can show you hundreds of them. Here's a pop and flag, pop and wedge. Run up and spike up. Right around lunch hour, we sold it up in here. One after another after another. Pop wedge, pop run, pop coil, another mini coil, and again, no support broken, unnecessary to sell it at any time. But we were in around the 77 range, and this thing got up to 90, $13 right there. Here's a really interesting one. After a sharp run up and a falling wedge, we don't buy falling wedges until they break out. But right there, at around 49.70 to 52.20, with a wedge and a wedge in between and a beautiful 5-wave advance. It's not rocket science, folks. It looks like it sometimes. But look at all these examples, one after another after another. Some of them are different, but a lot of them start with a pop and a little coil, and it stair-step their way up. In this case, we bought it at 215. We sold it over 4. That's 100% nearly. Shopify, popped and wedged, and when it broke through there, we bought it. Yet pulled back but held support, ran up sharply, wedged, and you can see that. I'm not going to go over, a lot more stocks, but I did want to show you that this happens day after day after day. With pop, wedge, pop, flag, and then run up in the channel. And to me, that's the way to trade. And the best part about day trading is at the end of the day, you're in cash with no overnight risk. Now, I do put out a lot of swings in my site. Some of my successful swings this year were phenomenal. I'm going to show you something. Check out these numbers here. These are my best swings from this year. Clovis, from 54 to 97, basically in 2 months. ESPR, 15 to 48 in 6 weeks. Immunogen, 488 to 804 in 2 weeks. Sangamo, 50% in 5 weeks. Nectar, another 90% in about 3 weeks. So those are typical swing trades. Now, obviously, I don't give you all the swings in there because there's several, but those are the best ones this year, and there's quite a few big winners. So in summary, and I'd like to take some questions from you guys a little later, but my firm belief is that day trade and successful day trading comes with knowledge of patterns, watching the volume. See this big volume here, for an example? When this stock gapped up and coiled, early on the volume was huge. And when it got very, very quiet, the volume got extremely quiet. And when it popped up, the volume came up again. That's typical bullish action. Up on good volume, down or consolidate sideways on quiet, light volume. That's the setup we look for in our site every day. I'd love for you guys to come in and check us out for free for 2 weeks with no credit card necessary. Just come in and sign up. You get a free two-disc DVD on day and swing trading from me, free. And even if you don't join, it's only if you join for free. So that's my little spiel. And again, I could, when I do my training, I go on for 4 or 5 hours. I just want to say one more thing. The use of moving averages is critical. There's 3 things I look for. I look for the trend analysis. I look for trends. I look for support and resistance. And I look for where the moving averages are in reference to those trends. And that gives me the best help. What are the things that people always say to me? Well, why don't you use this? Why don't you use that? Relative strength, ADS, all that other stuff. Look, I believe in keep it simple, stupid, right? KISS. Here I have volume and unbalanced volume, which I think is very important to confirm the volume. And then I have money stream and balance of power, which is similar to relative strength, ADX, things of that nature. But it's money, balance of power, and money stream are proprietary indices by Warden Brothers. I've been using Warden Brothers Telechart for 24 years. I'm one of the original users. I'm also a preferred analyst for Warden Brothers because of the way I use their charts. So at this point, I'd like to take some questions from the group, and if anyone has any questions, now's a good time. Okay, there's a few questions. I'm going to have to go to the top, I believe, where the questions are. Well, let me start backwards. I really don't want to look at individual charts. I want to answer questions on technique and style. How do I draw channels? Well, and Tom DeMark once told me one thing is kind of interesting, folks. He once said to me, the best thing about drawing a channel is never draw it from the bottom. And I asked him why. He says, well, the first angle is always the sharpest. And if you draw it off the first V bottom, okay, sorry about that. You draw them off the V bottom, and I'm going to give you some examples from today. Then you'll have to draw them off the tops too. So what I do is I'll draw it usually off that first pullback low, and then you can see a little channel break, but it did not break price support, so therefore I'd stay in a stock. What I'm also going to be looking for in a stock like that is can it break out over the trading zone? There's the buy. There's your
Harry,
there's
something up on the screen right now.
Nothing?
Nothing.
Why would that be? Oh, no screen sharing or something. I must have accidentally hit screen sharing. So I'm going to have to ask questions. Just answer questions. My bad. I must have accidentally hit that. I apologize, folks. So let me do this. I don't know if you can see anything now. I tried to put it back up again. Are you seeing me?
Yep, you're back up again.
Okay, so you can see the chart. What I was referring to is when I draw charts, for example, one of our big winners today was LPSN. And how I drew the chart today, let me show you. When it started out with a pop and wedge, we gave a buy right there. It then formed an ascending coil. See it? When the tops were broken, we put a buy out. It then ran up and did this. But what I would do is I would look at where the bottoms are right there and extend it. Draw a line off your bottoms. That really is a channel right there, or at least where support is. We were out there anyway, so we didn't care about any breakdowns because it never did break support. And this was phenomenal because when the market was falling apart in the afternoon, this kept making higher highs. So I put it out at 13. It got up to 14.05. That was a good trade for my traders. But to answer your question, when the stock pops and pulls back, you wait to see if that is a trend. You can always draw the trend like that, and then later on, change the angle. I keep telling people, one of the things I do all day is I come on literally every 45 minutes to an hour for anywhere between 30 and 40 minutes, and I go over all the charts that we're looking at, and I update them and show them where the new angles are, where the new support might be. And so people get not only the benefit of my recommendations, but they get the benefit of how I draw lines. For example, in Lending Tree, it popped and formed a falling wedge. We put a buyout right there. Very quick trade from about 2056 up to 218. Nice trade. And then it popped in a falling wedge, broke out. Notice where I drew the lines right there? For me, that was the trend line. When it broke there, some of us were out. We didn't sell it at the triple top. AXTI was one we tried to trade. That didn't work too well because it was a little bit too choppy and sloppy. We all, let's face it, folks. Some days you get the trenders, and a day like this, you may not. So let me answer some more questions. And I think I mentioned what the indicator was in the bottom of my chart. How do I judge a stock's initial breakout? Well, first of all, I look for several things. And I really am cautious on ETFs. Now, you see this channel that I've drawn over a period of time? This is the major channel. There is internal trend lines as well. This move up here, if you look at it on an hourly basis, looks better. But for me, LABD resistance is around 7. So look for a follow-through maybe to test that area. If it doesn't get it, oh well. LABU is one of my big swings this year. If you look at LABU in particular, on the daily chart, you'll see the beautiful base it formed. And I told everybody, you see this quadruple top here? I said, if this gets above 55, we're going long for a swing trade. Well, within 5 sessions, it was 70, 3, 18 points. So we were got out. Then it formed a wedge. It would be right there and broke out, but didn't follow through and backed off, and then went up and broke out again. What a head fake this was. A couple of days ago at 76. It looked like it was going to 80. And today, the biotechs had a very tough session. One of the things I'm worried about the market is when I see the biotechs breaking. If the LABU goes under 60, look out market. If the SMH, which has been a leader, falls apart and takes the 50-day moving average out, say under 85, and it's not far away, they could drop that down into the 82, 81 zone quickly. From a market standpoint, today was a bad break. If I look at an hourly chart, which I always do, you'll see it broke the trend and it snapped back. Look where it snapped back to, that 50 period. If the market opens lower tomorrow and comes down, you're likely to see 24, 50 zone, right about there. If it breaks support at 2460. So 2460 and 50 are now your support in the S&P, and your resistance is the new all-time high that it hit today, 2484. But when I see a trend break and a snapback to it, it can be called a kissback. The kissback can be dangerous if it fails, because then it can roll over hard. So we got to be real careful about the market right here. I think tomorrow's a very important day. How do I pick targets? Well, targets are based on several things. One of the things that Mike Thompson of Warden Brothers, who's the national sales director, marveled at when he saw my work was that he said, I've never seen so many lines on a chart. What are they for? Every chart you see in every stock that you see on my chart has these lines. Why this line? Well, that's a high back in here. This is a high over here. Okay, this is your trend channel. I'll always draw these on so that if it gets up to that level, I'll know that in a prior life, back here at 116, that's a big resistance level for Clovis. On a short-term basis, that number's 97. If it gets to 97, we got a shot at an 18 to 20-point run on Clovis. Clovis is acting great. With the biotechs getting hammered today, this is up 482. You got to ask yourself a question. Why on increased volume did Clovis close at the upper end of the range on big volume and have that kind of a move when the biotechs are getting smacked? Keep your eye on Clovis. Something's up. Maybe a takeout. A few more questions. My website is www.thetechtrader.com. If you come in, Ahmad, and a lot of boy, you wouldn't believe how many people that are subscribers of mine in Texas. But just sign up for free for 2 weeks, no credit card necessary. You can do the whole site and come into the room and see the several hundred people that we have every day trading with me in my room. Some people like my style. Most people do. A lot of people don't. I'm a very blunt New Yorker. I tell it like it is. I also have rules in a room. If you break the rules, I slam dunk you. I just don't like stocks under $2. I don't want to discuss them, period. They're too dangerous. Pop and drop. Now, what are the worst swings? The problem with swings is when they break support or they break my stops, they're out. So they're never more than 5 or 10%. Never. And anyone who sticks with a stock, I tell everybody, if you're in my room and you're not trading with stops, you're asking for financial ruin and suicide. You really are. I set my stops underneath the following. I look at the chart where the trend lines are. I look where the 50-day moving averages, the 5, the 10, and 21-day moving averages. I look up to see if they've crossed over. But more importantly, I look to see where lateral price support is, trend line support, and moving average support. And if a stock, if they're all near each other, that's great, because if it breaks that level or zone, then you're out, period. If a stock's going to break through 3 major support levels, it's a no-brainer. Move aside, get out of town. Stocks are like buses. Every 10 minutes, another one comes along. There's no reason to be in a stock. The number one problem with stocks is you fall in love with them. You know too much about what the company does. Your judgment is impaired. Judge by what you see, not what you think. Trade what you see, not what you think. That's a favorite expression in my room. Trade the chart and do not trade anything else. How do I scan for stocks? Well, look, I use a couple news sources that give me pre-market scanners. You can go to NASDAQ.com. I use Briefing.com. I like their news source. They put together a bunch of lists in the morning of stocks that are gapping in the news related to those stocks. For 35 or 38 bucks a month, I think Briefing.com is the best news source. I like them. I don't know how much more time we have, but I'd like to ask few more questions. Allison says, so a coil is when the price moves through the day's resistance level? No. A coil is when a pattern pops and gets narrower and narrower and narrower, and when it gets to the apex of that coil and then pops, that's where it pops out of the coil. But the coil itself is not when it moves through a resistance level. And the patterns I used in my presentation today are just examples. I could use patterns from today, tomorrow, yesterday. I always do that every day. Just didn't have the time to do that today. Somebody asked me, well, why can't you find current patterns? I find plenty of them. Do I find balance of power useful? I do, but I use mostly volume and unbalanced volume. The money stream is important. I think the balance of power is much more important than money stream, at least for me. I'm not going to go, and my title of my book is Profitable Day and Swing Trading. It's by Wiley & Sons. You can find it on Amazon or BarnesandNoble.com. Does anybody have a new question for me? Do I have auto trading services? No, you don't trade through me. Well, the other title was a book called Monster Stocks by John Boyk. I just like the book. And if you haven't read Technical Analysis of Stock Trends by Edwards and McGee, it's considered the Bible of technical analysis. You better get a copy of it. Technical Analysis of Stock Trends by Edwards and McGee. A must read. I've read it 10 times. Now, let me explain, Jim Strom, that when I trade smaller time frames, it's 1 minute charts intraday. But for entering swing trades or something, like a 3-day trades, I'm usually using 5 and 15-minute charts as well. I'm using the 1 minute charts for entry and exits for preciseness. But in terms of whether a stock is breaking out of a pattern or breaking out of a range, you can't use 1 minute because it only gives you a day or so. You want to use at least 5 or 15 minutes and even hourly charts to go back 3 weeks, a month, 5 weeks to see what the patterns developed in the recent time frame. Okay, John Hewitt. How big must volume be for me to consider it price relevant? 5 to 10 times. I said that earlier. I want to see 5 to 10 times above normal volume early in the session or even pre-market. Well, here's what Z wants to know about morning gap fails. Obviously, gaps fail in reverse. When you see the opening gap and it runs up, and then wait for the pullback. If it gets near the gap, you can either decide to either buy it with a tight stop and only a few cents loss, or wait for it to see if it holds and starts to move up. And if it starts to move up with volume, you can add a little. If it then takes out the top of the first move, you can add to it because it's breaking out and trending. That's what we do in our room. If some of my trades work out, look, I'll stay in a stock forever if it keeps trending. If it never breaks support, never breaks the moving averages, never breaks the trend lines, why sell it? Look, the other thing is I'm a big believer in leverage, so I'm going to buy stocks in a 5 to 35 range, ideally, and watch them go to 50, 100, 150. Don't you want a 10-bagger? Well, you're not going to get a 10-bagger most of the time. I'm buying a stock at 150 and watching it go to 1,500. Yes, it happened in a few cases like Priceline, but much easier for a stock to go from 5 to 50 than it is to go from 50 to 5,000, that's for sure. Is the 2 free weeks open for a month or so? There are vacations to deal with. We'll work around it, Carol. You talk to my people and tell them what your schedule is. You want a week now and a week later after your vacation, you can get that too. I think that's about it for me. Let's see, there's a few other questions in here. I'll take a moment. Let's go back up further. Some people asked me questions earlier that I've overlooked. How did I handle the stocks today when there was a huge drop? Well, many of the stocks that we had on a day trade trended regardless of the stock market. That's the one thing about people that make the biggest mistake I ever made and you ever made is when you sold the stock because you were worried about the market and yet the stock kept going up. Because in the middle of every market, no matter how bad it is, when there's 3,000 stocks down, there's always 300 up, 10 to 1, even if it's 150 up. You could be in one of those stocks. No reason to sell until support's taken out. I tell you every day where support is. I tell you every day where to lose it, where to stop it. If you don't, I cannot make the trades for you folks. You need to be disciplined and do it on your own. But I will tell you what to buy, where to support resistances, and where the targets are. I am not going to tell you where to buy it. I'm going to tell you what looks good, and if it breaks over a certain level, it might be a buy. When I issue a day trade alert, I give you targets and stops. Do I day trade shorts? Yeah, of course. This morning we had 2 of them. Yesterday we had 2 others as well. They were very good ones yesterday. Akamai and what was the other one? AKAM and I forgot. But when a stock gap, it's the same thing in reverse. If a stock gaps up on big volume and pulls back and gets quiet, we'll go long. If a stock gaps down on big volume and rallies up in a bear flag or bear wedge and gets to a resistance level, we may go short with a tight stop. And then I'll give you a target on the downside too. Every day, I will admit there's 80, 90% longs every day. But if we get into a real bear market, it'll be 50-50 or it'll be worse. For right now, I'm recommending longs until the market tells me so. One down day like today does not a bear market make. Remember that. We've seen a lot of one-day hits, and the market going right back up the next day. And also, there's a lot of good earnings reports tonight, so you have to see that too. How many stocks do I or can I watch? On my watch list is always 30 to 50 stocks every day. I scroll through them nonstop until I see some patterns develop or breakouts, and I'll let my people know all day. I'll also post news all day. I'm the most active guy you've ever seen. I'm on the site all day. I'm on verbally on a webinar. The webinar is open, by the way. You can see my screen all day. I never close it. But when I come on, I'll alert you to the fact that I'm coming on to do an update, and so that verbally I'll start to talk. But I'm not talking all day. But I may be posting all day. Of course it's not a timely fashion, Carol. Why would I advise you? It's immediate. It's like within seconds of when I think it should happen. And most of the time it's before stock moves. I'll see a setup and a coil or a flag or something. I'll say, if it pops this flag with volume, here's your targets and scalps. Of course I follow momentum, Jason. Most stocks on my board are stocks that are trending with momentum. I'll often say during the day, this stock has got a very sharp rising trend line and has strong momentum. I'm looking for what we call a Momo follow-through extension, and that's what we look for. And no, I don't look at, even though I hate to say this as Steve, I don't look at candlestick patterns. I know a little bit about them, but the point is a little bit of knowledge is dangerous. That's number one. Number two, if I'm doing something for 55 years and I'm good at it and I'm successful and my people are making money, if it ain't broke, don't fix it, right? So why do I need to include candlesticks? I do mention, engulfing patterns and stuff like that often, but I'm not a candlestick guy, period. I think that is about it, Steve-O. Let's see. Any quick questions here before
good stuff, Harry. Everybody take a look at look at what Harry does. I mean, he pinpoints the trades for you. So this is something where you're going again with the probabilities. So Harry, again, thank you very much. This is good information. Everybody take a look at it. And it'll definitely improve your arsenal of knowing what to do when. So with that, everybody have a good evening. Yep, go ahead, Harry.
I was just going to say, I really appreciate you having me on. It's great to work with you. For those of you who are new to Steve Bigelow, you should check him out because his work is terrific. And thank you very much, everybody, and have a good evening.
All right, thanks, everybody. Thanks, Harry. We'll see you in the chat rooms.